What I'm about to show you is the best scalping strategy I have ever come across in my 5.5 years of trading. It is called the 4-hour power of 3. It's effective, it's repeatable, but most importantly, it is just stupid simple. So that's exactly what I'm going to show you how to do in this video. My name is Jack Trades. Like I said, I've been trading for almost 6 years now, and one of the most important things that I've learned throughout those 6 years of trading is the majority of traders make their money in the first 90 minutes of the market open. For us traders, this time window is our bread and butter. So if you want to increase your chances on becoming a successful trader, then you need to master the market open. And to master it, you simply have to have the right trading strategy, or else it's game over. So in this video, I'm going to show you exactly how to use the 4-hour PO3 strategy in just 3 simple steps. I'm going to present this model to you the exact way that I've been trading it profitably for the last 2.5 years, in the same exact way that I've taught hundreds of other traders to do the exact same. Like seriously, here's me hitting a $16,000 day with the same entry model. My students are trading the exact same model, are hitting 60K months and getting ranked with prop firms on leaderboards. You get the point. You see how powerful this one candlestick can be. So without further ado, let's go ahead and get into step 1. The first step in this strategy is finding the one candle we're talking about and how it forms. The first thing you want to do on TradingView is go over to where it says indicators. It should be at the top next to your time frames. And then I want you to look up HTF power of 3. Okay, this is not my indicator. I'm not affiliated with 2 degrees at all. This is just the one I use. It's completely free. So once you find that, go ahead and put a star next to it and click it. The next thing you want to do is go over to settings here, go to time frame, make sure you're on the 4-hour time frame. This is the exact way I'm using this high time frame candle. This is the candle we're trading. Now, technically, yes, we are trading one candlestick's movement, but we're trading it on 2 different time frames. So the first time frame that we're actually going to be using is on the 1 to the 5 minute time frame. Okay, so that's typically what I have my chart in when I'm looking for my executions, the 1 to the 5 minute time frame. Our second time frame is going to be that candle that we just found through the indicator, our 4-hour time frame. Okay, now you can't just trade looking at the 4-hour time frame, and you can't just trade looking at the 1 to the 5 minute time frame. Where the strategy becomes extremely powerful is when you pair the low time frame with the high time frame. And that leads me here into how this candlestick is actually formed. So this is our low time frame, this is our high time frame. Okay, now we need to look at candlestick anatomy. Candlestick anatomy is fractal, meaning all candlesticks on all time frames are formed like this. However, the higher the time frame the candlestick, the higher the probability it's going to be. So there's 4 steps in a candlestick being formed. Step 1 is the candlestick actually opening. Okay, step 2, if we are bullish, is going to be forming a bottom wick of said candle. Okay, now step 3 is going to be us actually pushing higher to form the body of the candlestick and putting in the high. Okay, step 4 is after you've put in the high of that candlestick and you've formed a top wick like this, it's just closing. Okay, so step 1, we open. Step 2, we make a low. Step 3, we make a high. Step 4, we close. Now, it's the opposite in a bearish scenario, right? Step 1 would be open. Step 2 would be make the high. Step 3 would be making the low. And step 4 would be closing. Make sense? Now, what does that formation actually look like on the lower time frame, like the 1 to 5 minute time frame? First, just before or right when that new 4-hour candlestick opens, you will see the 1 minute time frame start to accumulate or move sideways. Okay, the volume is a little bit lower, almost like we're queuing up for something to happen. Okay, so that's step 1 on the lower time frame. We open and we accumulate. Step 2 is going to be a manipulation, otherwise known as a false move. Maybe we're grabbing liquidity. There's some narrative to it. But anyways, this is step 2, right? What we can see here is 1, we open and accumulate. 2, we manipulate and put in the bottom of that 4-hour candle. So the purpose of this manipulation is to put in that bottom wick of the candle. Now, step 3, we will see distribution. You've probably been a little bit familiar with this concept if you are in ICT Concepts itself. accumulation, manipulation, and distribution. That's a power of 3, right? You all have probably heard of that. If you haven't, easy concept. We're introducing it right now. But anyways, these go in combination, okay? That's how we want to trade it. And this is going to lead us into step 2. What does this actually look like on the charts? Our second step within the 4-hour PO3 scalping strategy is, where does price actually manipulate into? In the last step, I explained that at some point we are going to form a high of the 4-hour candle and see a PO3 on the lower time frame. But how do we know that's our manipulation? How do we know price is going to stop and reverse from that point? How do we know this is the true high and that we're not going to push 20 ticks higher to put in the high up there? How do we actually figure that out? And this brings us into example 1. So clearly we can see price has started to accumulate relative to what price was doing before. So we're already in phase 1. We've accumulated and that new 4-hour candle is open. Majority of the time when you find an A+ PO3 setup like this, we are going to form a 15-minute fair value gap just above price 15 minutes after that 4-hour candle opens. Like I said, this model is stupid simple and relatively mechanical for any skill level of trader. That is where I expect price to actually stop manipulating and put in that true high of that 4-hour candle. Now, like I said, I trade this with relation to my bias. For a ton of different confluences, I was bearish. So I'm waiting for price to tap into a bearish 15-minute and then start to push down, then I'm gonna start to take shorts. And finally, this brings us to step 3 of this stupid simple scalping strategy. Is price ready to reverse, okay? So here, we have marked out that 15-minute fair value gap. We can see we've accumulated, manipulated into that 15-minute gap, putting in that high of that 4-hour candle. How do we know price is actually about to reverse off of our point of interest and it's not just going to run through, okay? The beginner trader will set a limit order the second we get into that 15-minute gap. And maybe they get their stops ran because price manipulates a little bit higher. That's not what we're gonna do, okay? We're on the 1-minute time frame here. We are going to look for any specific entry confirmation, okay? That for me can be an inversion fair value gap, a change in state of delivery. An IFVG, for example, would be if this fair value gap gets a candle body closure below it. So let's take a look if we get an entry confirmation here. Okay. Not quite. We don't see any entry confirmations, right? There's no fair value gaps in here that get mitigated, or it mitigates it, but it doesn't push through it, excuse me. But let's see here. What do we just get? We get a change in the state of delivery right here, okay? Boom. Change in state of delivery. 2 candles making a new leg to the upside. The opening price of that gets a candle body closure below that, okay? Now, if you're not familiar with CISD or inversions, feel free to go through my YouTube and go through some more trade examples of those. They're very simple once you learn them. Anyways, once we get our entry confirmation, that's when we can finally try and take a short. And we can target anywhere from usually a 2 risk to reward on average is what we can catch with this trade. If we want to take it lower, we can definitely do that as well. As you can see, this one did play out a little bit slower, but you could have harvested exactly like a 2.3 risk to reward from this trade. I like to target high time frame gaps, points of liquidity, different points of interest. Now that we've gone through our first example on the charts, let's go ahead and take a look at another A+ PO3 setup that I also executed live. For this example, I want to walk you through my entire process and entire narrative going into a trading day like you were there with me live on the charts. So first, I usually like to start on the daily or the weekly time frame, but that's going to show you how the entire day plays out. But let's just assume we are already bearish on those 2 time frames as well. Now, I'm looking at the 4-hour candle right before 10 a.m. Eastern. 10 a.m. Eastern is the 4-hour candle you want to be trading most commonly. Okay, that's 30 minutes after the actual market opens, which gives you time to wait for more narrative, more confirmations, especially on the 15-minute and the hourly time frame. You get to wait for that initial fake out to play out, which gives you more room to play with more volume. Anyways, on the 4-hour time frame, I'm looking at entry confirmations. I can clearly see we just got a bearish change in state of delivery back to the downside on the 4-hour time frame. So that's going to make me pretty bearish. Let's jump onto the 1 hour. Again, we got a pretty aggressive candle to the downside. Asia session, we have Asia lows. All previous session lows have already been taken. But anyways, Asia kind of consolidates. London goes out and manipulates the Asia highs, and New York distributes to the downside, which is a bearish daily profile. Anyways, let's get into the nitty gritty and actual entry model here. Okay. Now what I'm going to do is I'm right off the bat going to start on the 1 minute time frame. Okay, let's play this out real quick. So what I have already been seeing is we already saw price had started to build this range of accumulation. Okay. Now let's go ahead and take a look on the 15 minute, what lies just above price. And you can see this taps in. We are on the 15 minute time frame. We have formed a most recent 15 minute fair value gap after prices started to consolidate a little bit. Okay. So that's going to be my point of interest, my point of reversal. Okay. So again, many people might make the mistake where they see, oh, accumulation, manipulation, we put in the top of the 4 hour candlestick and we're starting to push down. You know, it looks like it's going to flip bearish, right? This looks like our exact entry model. That's a pattern trade because you don't have narrative for the manipulation, right? You're just looking at ABC. No, we need price to go and tap into a 15-minute gap, a 5-minute gap, or an hourly gap 99% of the time with this strategy. So this is still technically our accumulation range here. We can mark that out as green real quickly. Okay. Now, what do we do pretty quickly here? We go and tap into that 15-minute gap. Again, I'm not going to enter the second we tap into that 15-minute gap. I'm going to wait for an entry confirmation. Okay. Boom. We get it on this candle right here. But as you can see, very simple, right? Accumulation, manipulation, tapping into the most recent 15-minute gap, and putting in the top of that 4 hour candle, doing both at the same time. And then what do we get? Another change in the state of delivery. That last leg to the upside, the opening price of that last leg to the upside, we get a candle closure below. So what am I going to do? I'm going to enter short. Stop loss placement. I 90% of the time like to have my stop loss at that high of the 4 hour that we have put in, because that signifies the top of that 4 hour candle. Okay. Now I could go break even at this 1-to-1. If I zoom out a little bit, I have some lows over here I can target. However, ES is a little lower. So if we get SMT, NQ is probably not going to take out those lows. So I'm not going to be greedy with this. Again, we'll target around a 2 risk reward, basically at that order block down there. Let's see how this one plays out. All right, boom. Instantly right down to that 2 risk reward, and I can remember this day running a lot longer. That's going to do it for this video. I hope you found a lot of value after learning the 4 hour PO3 strategy. I recommend go back test it and actually start to apply it. But if you're interested in diving more into this model specifically, and actually the way that I've traded and my journey in becoming profitable after my last 5.5 years of trading, I created the PO3 Bible. It's about 30 pages of pure sauce on exactly how I trade the model day to day, and also how to completely rinse prop firms by using it, because it's one thing learning the model, it's another thing actually applying it in the right circumstances so you can actually make money trading. So if you do want the PO3 Bible sent to you for completely free, just go ahead and click the first link down below. But again, hope you got a lot of value out of this video. Feel free to drop any questions in the comments.